right, here we go. Good afternoon. This is Neil, Simpler Futures, and it is Wednesday, Fed Day, May the 3rd, heading into, remember, Apple earnings tomorrow, and then the payroll report at the end of the week, Friday morning. And so the Fed has spoken, and we got the interest rate decision today. What you see on screen here is about 5 days worth of history, 15-minute chart. And the reason I'm trying to do this is in the tan color background, you can see last week's profile. It's a look at the distribution of the overall volume of last week. And then fast forward that into this week's, and you can see kind of what's going on thus far this week through Wednesday today. What's got my attention here is the fact that we came from last Wednesday's low down here, 40.70 or so in the ES, gapped up. See the gap here? We got a gap from close of business Wednesday into Thursday's open, and that gap's at about 4.085. That's certainly a target. I'm thinking at a minimum that's at least a target, but since then, we know the story, right? Rallied up, and then this big break here yesterday, earlier this week, we got this big, swift breaking price action that tried to recover somewhat today, retraced against this initial leg. This is what I'm looking at. This is what I'm thinking. Initial leg of the first wave of this selling, then step 2 was retrace. So now step 3, I'm looking for a continuation to beyond the low of Tuesday. That would the next wave after the retracement would be for a continuation to extend the first move. So naturally, if that's going to be the case, then we'd be interested in like, okay, well, what would be a target? And I think this gap down here kind of be a target. In fact, a gap right there at a minimum at 40.85, I'd say maybe even honestly a little deeper on this kind of volume cluster down here at the bottom, even a little deeper like 40.75. But here's what it needs to do, because we have 2 more still yet binary events in front of us, and that is Apple and then the payroll report, right? So what it needs to do in order to stay down, that's the next leg. So I draw a fib from the high of this move to the bottom of today, and we find that the 382 retrace is at 41.30. And remember, the very big level interested in seeing if it could overcome on the way up in order to have targeted the 4204s on the top. Remember that number was 41.35. So given the fact that this value area low here is the 382 retrace, and the fact that we know that we've got the over under that we were using before as line in the sand, 41.35, then what I'm going to say is I would like to see this uptick no further than 41.35, and that kind of keep it down for then failure of that uptick for another leg down to this bearish target down here. In the event that I'm wrong and it does choose to catch a bid and somehow make its way up here somewhere, target on the top I think it'd be 41.87 on the top. And you get to gauge that against 41.35 over under for target on the bottom or target on the top. I prefer the bottom, but it doesn't have to be true. Another thing that got my attention here about today's profile in the blue here is notice the taper on the top. It's quite thin on the top. Contrast that to the taper at the bottom. You see much more participation down here at the bottom. That happened because there was a double bottom. Well, triple now because it traded there yesterday as well at 41.05 and then traded there twice today. So you have like a double TPO bottom down here with a more of a blunt, not thin, but yet more rounded, blunt, higher participation down here. It makes a weak structure. It makes a weak low. So for that reason, that's another reason you would anticipate looking at it to trade out. And so That's pretty much what I've got for you. That, and you look and see what happened with crude oil today. My goodness gracious, it was down like almost 5%, $3.39 down almost 5% on the day. That somebody asked today was like, "What do you think about crude?" And what I mean, that's a big move. And I was like, first word I could think of was recession. That thing's pricing in lower demand in the future, and so. That's not exactly bullish for the equity space. Could be wrong, but that's not bullish to me. So if we start to see price action follow through in the direction that I'm proposing with targets, then I'll have some additional targets for you on the short side for next week, and that'll be down at 4025 on the bottom. That'll take SPX down to like 4,000, and that'll clean up some gaps, some really thin structure single print gaps down at the bottom down there that we got to at some point come back and retrace and fill in that profile. So that's what we got. Take care. Have a good evening. Good trading tomorrow, and I'll probably imagine another set of videos tomorrow night with updates as to where things are. Take care.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me